Gold ran back up past $5,100 this past week and looks to be continuing on well above. Now, this all despite a number of events that would normally be seen as headwinds. So what does this all mean? Does this mean that we've gone beyond gold as a hedge and now we're into peak gold? Well, it turns out somebody already stole that term. Earlier this month, Chinese miners reported a gold discovery that they say could be the largest ever recorded on Earth. Now, they give a conservative estimate of somewhere around 1,000 metric tons of gold. Now, we've heard big announcements like this before. We all remember Uganda, June of 2022, when they claimed a discovery that could yield 320,000 metric tons of gold. I said at the time, I think Uganda got their math mixed up in all their excitement because only around 200,000 metric tons of gold even exist above the ground today. That's all of history. So why is China making that announcement now? The timing is interesting. The industry's been talking about peak gold for years, but it's starting to take on new meaning. Now, gold, it's holding above $5,000, while other assets like silver, like Bitcoin, are bouncing around all over the place. So the question seems fair. Have we reached peak gold? Now, we're going to get into all of that, but first, a quick shout out to channel sponsor Summit Metals. If you're looking for gold and silver, they have you covered. If you're looking to sell gold and silver, they can help you there too. SummitMetals.com. So if we're getting these kind of gold discoveries like we just saw coming out of China, or the Uganda discovery / announcement, why hasn't global mine production grown in the past 7 years? And bigger than that, gold prices have more than doubled, so exploration budgets have increased, technology has improved, but global output has been stuck since 2018. And that's where this term peak gold comes from. Not that we've run out of gold, but that finding new economically viable deposits has just gotten a lot harder. But if you were to widen the lens, you could say peak gold isn't just about geology or production limitations. You could say it's also about gold moving beyond the old view. So gold as an inverse dollar trade or a fear hedge. What we've seen over the past few weeks is gold holding above $5,000 while other assets that people like to compare it to, like Bitcoin or even silver, have been far more unstable. Now, if gold was a hedge, it would have been bouncing around with every headline we got this past week, and there were a lot. If it was a normal commodity, then peak gold would have sent prices higher way back in 2019. Now, the fact that it wasn't until 2024 that gold really took off tells us this is more than a simple story of supply and demand. Now, if it was just about supply, announcements of these massive new discoveries would be given a lot more attention. You probably didn't even hear about the so-called supergiant discovery in Hunan province. Now, as for tailwinds, we got news on Friday that fourth quarter GDP came in at 1.4%, badly missing estimates. We saw core PCE sticking at 3%. That's well above the Fed's target. And we saw the Supreme Court strike down Trump's emergency tariffs. That would limit a major source of trade and inflation uncertainty. Now, on top of all of that, the market just continues to climb. So put all that together and gold should be down, right? Well, it's not. Gold held above $5,000 an ounce. So if it's not reacting like a simple hedge, what is it acting like? The point here is this. If gold was just a trade, it would be swinging a lot more wildly like silver. And if it was a risk asset, it would be moving a lot more like Bitcoin. But it's not. It's acting like a reserve asset, something that doesn't care about a single US GDP data point, court ruling, or a week of market gains. Reserve assets don't do that. They don't move on every headline. They move on long-term positioning shifts. Something really big, something more like a shift away from the US dollar. So let's look at what's been happening with gold price. We can see pretty quiet story for gold from 2013 through 2018. I mentioned that's when we started hearing about peak gold as a commentary on mining difficulty. But price didn't respond. Nothing really changed at all until October of 2023. And when you look at 2024 and 2025, that's when things really took off. So what happened in the fourth quarter of 2023? Well, a few things at the surface level. First of all, central banks had been buying gold since 2018, but by 2023, it became clear that none of that was temporary. It wasn't about Ukraine or something only happening in a single country. It was broader than that. It was sustained, and it was happening at record levels. Next up was the US dollar peaking in real terms. It had a monster run into 2022, but by late 2023, that run had stopped. And then maybe the most obvious, interest rates. In September of 2023, the Fed delivered the final rate hike here in the United States. In November, that following meeting, the tone changed to being data dependent. And then by December, rate cuts were projected for 2024. That was the pivot. But beneath all of that, we had this shift away from the US dollar. And this is really where gold became more interesting because it's the asset the countries have been shifting toward. Now, come back to this idea of peak gold. It's harder than ever to add supply at a time when it's more important than ever. And by more important than ever, I mean to the balance sheets of the world's biggest players, central banks. And it lines up with an idea that I've had in my head for a long time and the reason behind what I've been doing by buying gold, setting it aside since 2013. This is why I treat silver differently, why I see it as a trade. It's why my Bitcoin adventures have been pretty limited. Not because I don't think it can go higher, but because it doesn't function the way it's marketed. Now, this is why when Robert Kiyosaki said in early 2024 that we're a bunch of fuds if we don't sell our gold and buy Bitcoin, I laughed. And it's why when silver hit $120 an ounce, I sold. Now, what we've been seeing is gold becoming more important and producing it becoming harder. It doesn't mean silver or Bitcoin are worse off because of it, but it reinforces the idea that gold is the core layer. It's why JP Morgan gave a $6,300 target for gold in 2026 and why UBS set a $6,200 target with modeling as high as $7,200. Now, the thinking behind continuing to save in gold is that its continued run does not depend on possible hype events. Those big bank price targets, they aren't based on hype. They're based on this structural shift, a shift to a greater reliance on gold as a reserve asset by the world's largest buyers. And if we could take one thing away from all of this, it's that if the world's biggest buyers don't think of gold as a trade, neither should we. And let's call it good there. Let us know what you think. Are you buying gold as savings or as a trade? Either way, $7,200 an ounce would be a really fun scenario for 2026. I'd personally be happy at $6,300, but let us know what you think. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more of the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.